Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, its weekly commentary as a basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see that the S&P 500 was up half a percentage point. The Canadian stock market was negative at 0.2%. Down. If we take a look at the action last week in the market, it was really focused on the Federal Reserve last week and its meeting on Wednesday. Now, the Federal Reserve came out a little bit more hawkish, but did talk about the economy improving and that tighter monetary policy was justified. Perhaps they also indicated that they might hike rates in late 2022, as well as start the tapering of bond buying, its QE program, tapering it in 2021 as well. But overall, investors were quite positive on the news that the economy was moving stronger. This week, we do see the focus might be on the Chinese real estate company, the largest real estate company, Evergrande, which is on the verge of defaulting or going bankrupt. And there's all sorts of different sources of information if they might be bankrupt or the Chinese government's going to come in and help. It's been a concern for the last couple of weeks, but this week we could see a bubble over, and investors are a little bit concerned that that could spill over into the international markets as well. On Friday, we do have the United States ISM Purchasing Managers Index, the PMI, coming in for September. It's expected to come in at 59.9, which is the same level as it was in August as well. Last week, we did see HAC make some changes in its portfolio. It reduced its gold bullion holdings down last week, as gold bullion is getting close to the end of its seasonal period, and gold bullion's also been performing a little bit weak recently as well. HAC also did exit its utilities position last week, as it's getting to the end of its seasonal period. And as well, it also too reduced its short sell position in the material sector, as the material sector is starting to show some strength as well. If we take a look at what's happening in the markets themselves here, we can see here on a daily action for the S&P 500 last week. Here's Monday down, Tuesday down, Wednesday was up. After the FOMC meeting, investors shifted onto a risk-on move as they were buoyed by the hopes of a stronger economy. Thursday was positive, and Friday was positive as well. So a little bit of volatility last week. First couple days down, the next three were positive as well. If we take a look at what was happening on a sector basis, here we have the S&P 500. Was up 0.5% last week. But if we take a look, let's break this down and take a look at the growth sectors of the market. Technology was positive, actually, and outperformed the S&P 500, as well as the consumer discretionary sector. Communication services was negative. And if we take a look at the cyclical sectors of the market, industrial was positive, outperformed. Materials was positive, but barely, and didn't manage to outperform the S&P 500. The energy sector was a big winner last week, and positive and outperformed, as well as the financial sector outperformed the S&P 500. Now, this is largely caused by a rising yield on the 10-year Treasury note. With rising yields, that tends to help the financial sector. If we take a look at the defensive sectors of the market, real estate down, consumer staples down, healthcare down, and utilities down. Investors really shifted from a risk-off mode to a risk-on mode last week, and all jumped in, driving the markets higher, and some of the cyclical sectors as well. So what's happening in the market coming up this week? Well, the big news is Evergrande investors are still going to focus on Evergrande as well and see what the resolution is going to be. There's a lot of confusion around that, and that could have some spillover implications as well. There's going to be some focus on the PMI number that does come out on Friday to see if the growth that we're starting to see a little bit of, investors have been really cautious about growth slowing down, and investors are really going to look for confirmation that we're at least steady on that. Now, we do slip into October. The first trading day of October is on Friday this week as well. Investors should note that on a long-term basis, on average, overall, the October for the S&P 500 has been positive. I know October gets a bad rap for the stock market as being a bad month for the stock market, but it really comes down to the volatility, because October tends to be one of the more volatile months of the year for the stock market. And that's really what concerns investors. And we did see it in September. We have seen some volatility as well. And just because we had the FOMC meeting, we've seen the market pick up a few days after the FOMC meeting, it doesn't mean there's going to be a sustained trend on that. In fact, if we look at previous FOMC meetings in 2021, we have seen some of them actually, the trend after the FOMC meeting has been in one direction, and then a few days later it's reversed itself. So we could see a little bit of a reverse here. But overall, we have seen October be a really, really volatile month on average over the long term. Now, the good news on that is that sometimes that volatility can lead to a good opportunity to increase beta, or also to increase equities in a portfolio as well. Thank you very much for joining me today.